Wall Street just made a strange choice. No, not strange like a meme, strange like a very expensive committee meeting got interrupted by a server invoice. It looked at sticky inflation, a cautious Federal Reserve, and then somehow said, fine, the bigger story is artificial intelligence servers. That sounds absurd. Good. Markets often hide the interesting part inside the absurd part. Quick transparency note, this video is produced with help from artificial intelligence, including my verified digital avatar. The analysis and editorial responsibility are mine. And quick market note, this is education, not financial advice. I am not telling you what to buy or sell. I am showing you the machine behind the move. So here is the thing. The story is not just that stocks are near records. That is the easy headline. It is shiny, it waves at you, fine. The more important part is quieter. Artificial intelligence is moving from story to infrastructure, not inspiration. Infrastructure, orders, servers, cloud capacity, software usage, and real spending. Start with Dell. And yes, I know, Dell is not the poster child people expected. It is the loading dock behind the magic show. That sounds boring. Good. Boring is where budgets show up. Dell reported record revenue, huge artificial intelligence server revenue, and a much bigger server outlook. Translation, customers are not just nodding in artificial intelligence meetings, they are buying the boxes that make the thing run. Now, Nvidia is still the engine room. Its latest quarter showed record revenue and record data center revenue. But pause on this. The market is no longer treating artificial intelligence as one chip company wearing a crown. The spending is spreading through the stack. Actually, that is the whole video in one sentence. The story is leaving the slogan stage and entering the invoice stage. Now Snowflake gives us the next layer. This is where people flatten the story too much. Snowflake sits closer to the data layer. It reported strong product revenue growth, artificial intelligence, product adoption, and a larger cloud infrastructure agreement with Amazon. Translation, useful artificial intelligence needs organized data, compute access, and governance. Otherwise, the model is a very expensive intern with no filing cabinet. Funny image, serious point, so simple version. Nvidia sells the engine. Dell packages artificial intelligence into infrastructure. Snowflake helps companies turn data into usable workflows. The headline is loud, the mechanism is quieter, and the mechanism is spending. Now, here is where we stop smiling for a second. A real spending cycle can still become an expensive stock market. Those are different things. April inflation was still well above the Federal Reserve target. Higher inflation can keep rate pressure alive, and rate pressure changes how much investors pay for future growth. This is the part people skip. Artificial intelligence demand can be real, and valuation can still be stretched. Both can be true at the same time. The market is not a courtroom. It can accept two conflicting facts and then ask everyone to act normal. So the market is asking three questions. First, is artificial intelligence revenue broadening beyond the obvious winner? Second, are margins holding up as compute costs rise? Third, is inflation calm enough for the Federal Reserve to stop fighting the tape? That is the dashboard. Not pretty, useful. The base case is artificial intelligence infrastructure stays in front, but rates keep the rally selective. The bull case is broader demand and healthy margins. The bear case is not that artificial intelligence is fake, it is that spending is real, but the market pays too much. If you remember one watch variable, make it this. Look for the boring words: backlog, guidance, cash flow, and margin discipline. I know, nobody puts margin discipline on a thumbnail and gets invited to a party, but that is exactly why it matters. Watch whether artificial intelligence revenue keeps moving from narrative into those numbers. That is the difference between a hot story and an investable cycle. So yes, the market is reacting to Dell, Nvidia, and Snowflake. Underneath that, it is asking a bigger question. Is artificial intelligence becoming the next infrastructure layer of the economy, or are investors paying a premium for every artificial intelligence sentence? No, one report does not settle the debate, but it changes what the market is asking for. Proof, not vibes, orders, margins, real usage, real capacity, real customers. And that is the weird, serious point. The artificial intelligence trade is getting less magical and more industrial, less wizard robe, more invoice. For investors, that is good news because invoices can be checked. If this helped you understand what the market is really pricing, subscribe for more source-backed artificial intelligence and technology investing breakdowns.